Assalamu alaikum. Your Excellency, Taha bin Salim al-Amri, the Executive President of Central Bank of Oman, Your Excellency, Abdullah Salmi, the Executive President of AFSA, Your Excellency, Dr. Wissam al-Fattouh, SG Union of Arab Banks, my fellow speakers, moderators, and panelists of the conference, members representing the Union of Arab Banks, distinguished invitees, and participants. It is a great pleasure to welcome you all, the dignitaries and the representatives of the Union of Arab Banks, to Muscat, the heart of Oman, for the second edition of our International Risk Forum. Allow me to begin my address today by emphasizing the clear and transparent commitment we hold as central bankers and regulators. We are actively engaged in addressing various challenges, including, but not limited to, modernizing legacy systems and technology infrastructure. Additionally, central banks actively engage in crafting innovative technological tools which enable seamlessly transition of our financial system to what we envision as the Finternet, the financial system of the future. In order to effectively regulate and supervise the latest technological development, central banks must enhance their capabilities, expertise, and infrastructure by implementing the latest technologies, foster a culture of innovation and collaboration with industry stakeholders. This demands that central banks remain proactive $230 billion in assets on May 1st, 2023. To give you a sense of this magnitude, only 16 countries in the world has an annual GDP which exceeds the total value of these banks' assets, 1.1 trillion. Despite the financial ecosystem in Oman being different than that in US, we undertook a full review of the root causes of these crises and learned from the supervisory and regulatory responses, and we continue to monitor the implication of the crisis since. I will highlight one topical issue here, liquidity. One common trigger for failed banks was significant liquidity outflows and an inability to maintain sufficient stable funding. I will leave for our experts today here to thoroughly discuss technical shortcomings in the current global liquidity standards. But let me elaborate on the role of digitalization and social media on liquidity outflows. Innovation has made it faster and easier to move money, from the creation of the ATM to modern digital banking apps. When combined with advances in communications technology, withdrawals can now be initiated online in a matter of minutes, if not seconds. It is very critical that banks be operationally prepared to handle liquidity stress scenarios, such as rapid and high volume deposit outflows can significantly alter their funding profiles. And the role of social media and the digitization of financing on a bank's distress must be further examined. A critical question must be raised here. What is the best way to monitor and respond to social media in both normal times and times of stress? Now, let me move on to the regulatory landscape here in Oman. Against these lessons learned from the 2023 banking failures and in line with our promising Oman Vision 2040, let me share with you our key regulatory and supervisory insights, enhancing existing prudential measures. CBO is working with Oman Banks Association to have a standardized regulatory expected loss rate that will be used as a benchmark against variabilities in the outcomes of banks' internal models. Strengthening a financial conduct regulation and supervision after issuance of a detailed framework on financial consumer protection regulatory framework in December 2021, new disclosures were introduced. This will push banks and non-banks to prioritize customer satisfaction, enhance operational efficiency, and keep a positive reputation in the market. Enhance risk-based supervision approach. We have made lots of effort to enhance our risk-based supervision in order to strengthen our forward-looking approach in relation to systematic importance and risk profile of financial institutions, business model analysis of financial institutions to become integral part of supervisory framework, wider adoption of stress test, and the use of supervisory judgment rather than compliance-based supervision. Introducing a comprehensive ESG framework to integrate climate consideration into regulatory and supervisory framework, a draft master circular on sustainable and green financial practices has been developed and is currently in consultation phase. The instruction primarily requires financial institutions to significantly revamp their strategy, governance, as well as credit and risk management practices to ensure a sustainable future and to actively facilitate investing in green projects. It also includes detailed regulatory instructions and disclosure requirements for banks and financial institutions. Digital onboarding and electronic KYC to establish a reliable, independent source data to verify customers for digital onboarding. CBO established the National Digital Onboarding Registry. Supporting fintech and key technological advances, several milestones have been achieved here, including we developed Buy Now, Pay Later framework, and CBO is currently developing the regulatory framework for digital banks, targeting to roll out in 2024. Our open banking framework finalization is in its advanced stages. RegTech tool was implemented for AML purposes, and importantly, CBO established its FinTech regulatory sandbox to foster innovation. Finally, CBO Financial Sector Development Master Plan. The Financial Sector Development Master Plan is structured around 8 pillars: strengthening the stability, stimulating the financial sector, expanding financial and social inclusion, advancing digital transformation, safeguarding consumer and financial system, fostering a sustainable and green financial system, and finally, building capacity and boosting awareness while strengthening structural foundations. And the master plan will be implemented in phases, inshallah. In conclusion, I begin my remarks by highlighting the regulator's obligation to ensure financial systems are fit for the finternet. I would like to conclude by emphasizing the importance of a balanced and prudent regulatory approach to safeguard our financial systems during the inevitable journey toward digitalization and financial innovation. I wish you all fruitful discussions and engaged participation and a pleasant stay in Oman, inshallah. Thank you so much. Thank you very much.